you're really in it, and let's just get to them. All right, trading tips, trading lessons that I've learned in 2023. These are my four. First one is use stop loss or take profit. Now, this can be applicable if you're day trading or if you're swing trading or if you're buying and holding long term as well. Typically, if you're buying and holding long term, you probably shouldn't even never take profit. You should just, ride it out. However, there will be points where you should take profit, and it's important to know what the market is showing you in the economy and a lot of factors. So, use stop loss. This is a tip when if you open a position and you're swing trading something, if you buy it at $100 and you're saying, okay, if it drops to $90, then I'm not willing to lose more than that percentage on the trade or on the option. So you would use this stop loss to protect yourself from losing more money than you're willing to lose. Now, there's been times where I forgot to put stop losses on because I just think that, at times I knew it all and I was like, I won't go down too far. And then something bleeds down 50%. And you're like, freak, man, I should have really put that stop loss on. So stop loss is very important to save you from losing too much money. And on the opposite side, the flip side of that is you got to take profit when you're up. Now, if you're up over 200% on a trade or you're up 200% on an option, it's important to take the profit because once it turns around, it may take another 2 weeks, 3 weeks to go back up. And if you're trading options and you have an expiration date for, a Friday and it peaks on a Tuesday and you don't take the profit there and it goes down and it doesn't go back up to that point for another 3 weeks because, that's just how the momentum takes it, then you just missed out on the opportunity to even make any money. And you may have to sell that option or that contract or close that position with a minimal gain versus when it peaked and taking a profit there. The next tip I have is to have target prices in a plan. This kind of coincides with the first tip. Before you enter any trade, before you buy any option or contracts, or you got to have a plan in place. You got to be like, okay, I'm going to enter at this specific price. I'm going to take some profit at this once it hit this price point, and I'll close some more positions at another price point. So if you buy it at 100, you're going to take profit at 115. You want to take some profit at 130, maybe. Have a plan in place and follow the plan. Don't deviate the plan unless factors cause you to change the plan. I like one of the things that Wall Street Trapper says is until the story changes, just stay the course. Things stocks go up, stocks go down. But if there's no story behind it that's going to change this the meaning of everything, then just go with the flow, go with where the momentum takes you. That is tip number 4, which is you can't guess direction. But before I go to that, I'll just talk about time and why that's important. Now, time is, as you can see, if you go back to my previous slides, where we all saw the Magnificent Seven, all went up mostly 50% on the year. That's a time-based growth rate there. If you open at the beginning of the year and held it to the end of the year, even though it went up, it went down, went up, went down, it all closed up at least 50%, Apple 49%, but they all went up almost 50% on the year, and that's what time would do for you. So when you open these positions, swing trades or options, give yourself enough time for the stock or the position to really go up. Don't just make it a short trade. Don't just buy it on the Monday and sell it on a Thursday and get a $4 gain. Because if you're not having enough shares or positions open, you're not going to see that much growth. Now, if you open it if you have enough capital that you can buy 10 contracts, 20 contracts, or 200 shares, 100 shares, then you'll see a little bit of growth that makes it worthwhile. However, if you're just starting out, you kind of want to start off and just give a contract or a trade enough time to really develop and get the growth so you can turn those $3, $4, $5 gains into 20, $30 gains, $50 gains, $100 gains for the year, $100 gains in 6 months. It's possible because we've seen in 2023 a lot of stocks was able to do that. And the last tip is you can't guess direction, you just got to follow it. Now, if you're looking at a chart and you see that it's just been going down, 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 then maybe it's an opportunity to execute a put, open a put position, and ride it down. But when you see it turn back and it goes back up for a considerable amount of days, like if it's under the 20-day and it's trading back up to the 20-day, that's an opportunity. You just got to go with it instead of trying to guess it and just open a trade willy nilly without even doing your own research or homework on where the stock is, where it can go, what kind of news is out there that could make it go up or down. So you got to pay attention to a lot of things. Don't just guess it, just go with the flow and make the money, man, because it's a lot of money to be made.